Yes, 7 cash flow statement. Direct and indirect method is a choice, but as per SEBI circular, indirect method is to be followed. Ind-AS 1 states that cash flow statement is an integral part of the financial statements. If it is for the year or interim financial statements, cash flow statement is an integral part of the financial statement. Purpose of preparing cash flow statement to ascertain the cash position of the company, to ascertain the liquidity position of the company, plan the investing and financing activities, ability of the entity to generate cash. Cash flow is cash inflow and cash outflow, not cash flow. Depreciation is not a cash flow. Provisions is not a cash flow. Conversion of debt into equity is not a cash flow. Amortization of intangible asset is not a cash flow. Forex translation is not a cash flow. Write-off is not a cash flow. Redemption of preference shares into equity is not a cash flow. Deposit of cash into bank is not a cash flow. Cash and cash equivalents. Cash and bank, highly liquid assets, marketable securities, FD of less than 3 months, treasury bills, commercial paper, marketable bonds. Bank OD if it is part of cash management objective of the company. FD with lien but maturity period of less than 3 months would be considered as cash and cash equivalents. Restricted cash would be cash and cash equivalents, but it will be shown separately. Short-term government bonds would be cash and cash equivalents. FDs of 1 year are not cash and cash equivalents. FD with maturity period of less than 3 months are not cash and cash equivalents. Original maturity period of FD should be less than 3 months for it to be a cash and cash equivalent. So, original maturity period is 12 months, but it is going to mature in less than 3 months. It is not a cash and cash equivalent. Loan given to party is subject to risk and it is not a cash and cash equivalent. Operating activities, investing activities, financing activities. No exemption for any class of companies for the cash flow statement under Ind-AS. Cash flow from operating activities, direct and indirect method. Direct method, cash sales less cash purchases less cash overheads less interest, cash profit. Indirect method, profit after tax, add depreciation, add loss on asset, add interest paid, less increase in debtors, add increase in creditors, less increase in expenses. Increase in creditors is an inflow, decrease in creditors is an outflow, increase in debtors is an outflow, decrease in debtors is an inflow. Cash flow from investing activities, purchase of PPE machinery, purchase of investments, investment in equity, rent received in investment property, dividend received in investment, loan to subsidiary, intercompany deposits, which results in long-term asset is an investing activity. Cash flow from financing activity, IPO expenses are financing activities, share capital, loan taken, interest dividend paid, any transaction affecting the capital structure of the company. Cash flow statement, opening cash and cash equivalents, add cash flow from operating activities, add cash flow from investing activities, add cash flow from financing activities, closing cash balance. Interest dividend paid is financing activity. PF means interest dividend paid is financing activity. Interest dividend received is investing activity. Classify the following as operating, financing, investing for banks. Interest received on loans, investing activities. For banks, it is operating activity. For others, it is investing activities. Interest paid on deposits. For banks, it is operating activities. For others, it is financing activities. Uh, Deposits repaid. For banks, it is operating activities. For others, it is financing activities. Loans given to customers. For banks, it is operating activities. For others, it is investing activities. Loans repaid by customers. For banks, it is operating activities, and for others also it is operating activities. Commission received. For banks, it is operating activities. For others also it is operating activities. These rentals paid operating activities for banks, operating activities for others. Goods and service tax paid operating activities for bank, operating activity for others. Furniture purchased investing activity for bank, investing activity for others. Implementation of upgraded software investing activity for banks, investing activities for others. Purchase of shares investing activity for banks, investing activities for others. New cars purchased investing activity for banks, investing activities for others. PF paid for employees operating activities for banks and operating activities for others. Issued employee stock options is a non-cash items. Investment in bonds. Fair value 6 lakhs purchased at 5 lakhs. Investing activities 5 lakhs for banks. Investing activities 5 lakhs for others. If business is real estate, then buildings will be operating activities for banks and operating activities for others. If business is not real estate, then building will be investing activities for banks and investing activities for others. Parent parent company transactions, issued preference shares, financing activities, purchase shares of 100% subsidiary, investing activities, dividend received on shares of subsidiary, investing activities, dividend received from other company, investing activities, bonus shares, non-cash expense, purchased license for manufacturing, investing activities, royalty received, operating activity, rent received from letting out, and letting out is not the main business, it is an investing activity. Interest received from advances given, investing activities, dividend paid, financing activity, interest paid, financing activities, purchased goodwill, investing activities, acquired assets by issue of equity shares is non-cash expenses. Key concepts: gross basis versus net basis. Examples: net amount received from DLF and rent is received on behalf of DLF, then net is net basis. Gross means receipts are separately and payments are separately. Net basis, DLF, credit card, etc. Amount received in USD, then it is shown as cash and cash equivalents. Effect of changes in cash and cash equivalents 30, closing cash balance 130. Interest paid and dividend paid, financing activities. Interest and dividend received as investing activities. You can remember by the synonym of PF. PF means paid is financing, and dividend received is investing. And entity invests in 10-year bond of face value of 66 lakh by paying 231,500. The effective rate of interest is 10%. The entity recognizes interest income proportionately in the P&L. How should the same be recognized in cash flow statement? Investing activities of rupees 231,500. Effective interest, no impact on cash flow. After 10 years, recognize the inflow from investing activities as 6 lakhs. Example: interest received on loans and advances given is interest received as investing activities. Interest paid on deposits and other borrowings is financing activities. Interest and dividend received on subsidiary is investing activities. Dividends paid is financing activity. Finance charges paid is financing activities. Payment towards reduction of outstanding lease liability is financing activity. Interest paid to vendor for acquiring asset on deferred payment basis is financing activity. Principal sum payment for acquisition of fixed assets is investing activities. Penal interest received from customers for late payments is operating activities. Penal interest paid to suppliers for late payments is operating activities. Interest paid on delayed tax payments is operating activities. Interest received on tax refunds is operating activities. Loss of control or gain control. Previously holding 10% and now becoming a subsidiary or loss of control is an investing activity. No loss of control, having 80% and selling 5% then it is a financing activity. Disclosure, reconciliation of cash and cash equivalents, any restriction on cash and cash equivalents to be separately shown. This brings us to the end of cash flow statement. Please do like and subscribe the channel. Thank you so much.